Fitzgerald, this is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.
This episode of Dubai Works is sponsored by Petra Insurance, a groundbreaking player in the UAE insurance market with more than 55 years of experience in the industry. Petra Insurance offers a range of products to individuals and companies, providing quick solutions and the advantage of paying in installments. They also recognize the importance of transparency, and they make it a point to assure trust in their policies. You can get in contact with them directly by visiting insurewithpetra.com. So last week we talked to someone in the F&B industry, and typical of Dubai Works, we're going to jump right into a deep dive into a different sector. Today it's all about fintech, and particularly a kind of a granular space of fintech, which is financing, or a new term of I've learned in financing is factoring, of how to collect a type of receivables. Ankit is joining us from MODIFI. They are a fast growth fintech company, and it's a really interesting conversation. We jump all over the place. We go into everything from governance to crypto to AI. We talk about all the different aspects and also the difference in the countries that he looks after as well. So enjoy the conversation. Good morning and welcome back to another episode of Dubai Works Business Podcast. This week we're joined with Ankit Goel, the Middle East regional head of MODIFI. They are a trade, finance and fintech company offering solutions for companies who need to succeed and grow in that space. They have multiple offices globally, and MODIFI expanded its footprints last year to establish its presence in the UAE. So today we're going to be talking about what their offering is and why Dubai, and a look at the future as well. Good morning, Ankit.
Good morning, Richard.
And happy Diwali.
Thank you so much, Richard.
Thanks for coming in. We're celebrating Diwali today in the office, so it's nice to have someone who's celebrating on the show as well.
Thank you so much. Thank you so much for having me on the show.
And thanks for coming in. So can you explain a little bit more about the company and your role as well, please?
Sure. Happy to do that, Richard. MODIFI is an abbreviation of Modern Digital Finance. That's how the name comes into play. We are a German headquartered trade finance and fintech company. We are funded by large organizations such as Maersk Growth, which is an arm of Maersk Containers. I'm sure you've seen containers everywhere. Yeah. And also players like Rocket Internet, who started Souk.com in the Middle East, which was then later on to Amazon. Everybody knows about it. So what we do is we try to help SMEs to manage their finance and also the trade globally. So what it means is we provide them with the solutions and a platform which helps them and enable them to grow the business globally, and also help them to leverage and manage their working capital better.
Okay, interesting. So what was that? Modern something finance?
Modern digital finance.
Okay. Yeah. MODIFI. There's a podcast by Kevin Rose called MOFI, which is modern finance, but this is modern digital finance. Brilliant. And your role exactly, Ankit?
Sure. I'm the regional head of the company, which I manage basically Middle East, India, Bangladesh and Pakistan region.
Okay.
So as I said, it's a German company, have offices around the world. Okay. So about a year back, MODIFI decided to have an office in the region as well, because it's one of the very important region globally. Yeah. So when you do trade and finance, of course, you cannot leave Middle East out of it. Right?
And had you been with the company before in another region to set up here, or were you new to the business?
I was working in another organization, which is larger organization as MODIFI, but more of paper-driven organization. So that's where MODIFI said, hey, look, Ankit, understand what business is, so that's the reason we decided to get into the region here. Okay. But globally, we are in the space for about 3 years. So started in Germany, then we started in India, then gradually growing into different markets.
Okay. So when you said it did a payment, focus on payments, so what is the full offering of MODIFI? And
sure.
3 years, if it only set up 3 years ago, that means it's quite at the at the advanced level of the latest trends in fintech, because obviously fintech has gone through different stages.
Absolutely. So what we do is we basically provide the financing and the entire solutions around the trade. Yeah. So if I were to just give you some example, let's say there's an SME company selling a bottle of water to, let's say, Lulu as an example, right? Yeah. Lulu says, look, my payment terms are 30 days, 60 days, or even 90 days. So what we do is we enable these SME companies to do this trade. So we pay to the SME company the day they deliver it to Lulu, and on the due date we collect the money from Lulu.
Okay.
So we do it on a non-recourse basis. This means we do not take any collaterals from the SME companies. So it helps them really to work and compete against the larger player.
Okay. Explain collaterals. You don't take any
Plant, machinery, building, house, arms and legs. We don't take anything from that.
Okay, fair enough. So it's a form of lending then.
It is indeed a form of lending.
And I know of types of companies who help SMEs when they have clients who owe them money, or they invoice financing and things like that. But this is more specifically around orders, is it?
Not really. So there's a technical difference between invoice financing and factoring. The technical word we use is factoring.
Okay.
So maybe let's take as an example, right? Let's say you supply to, let's say Zara as an example now, and you say, look, I supplied $1 million worth of goods to Zara. Now I'm waiting for the payment, right?
Yeah.
So if you go to a conventional bank and say, look, I'm waiting for the money. Can you pay the money to me? Bank will look at your balance sheet and see whether it's worth giving money to you or not, right? Versus when you come to companies like us, we don't look at your balance sheet, we look at your customer's balance sheet, and we take risk on that, which is a game changer, right? From your perspective as well.
Yeah.
Second key difference is when you work with a conventional bank says, look, I'm giving you the money, but in return, I need a security from you, right? What if you don't pay me? So I need a collateral, which could be house, it could be plant, machinery, stock, and all of that, right? We don't take anything of that sort. We just take a piece of paper, which is an invoice raised on Zara, right? Third key difference is when, God forbid, something goes wrong with your buyer, bank says, I don't care, I gave the money to you, I need the money back from you. Versus in our case, we work with our insurance partner. We go to them and cover your risk as well.
Okay.
Yeah.
Amazing. Well explained. Thank you. But it is another area. It is another layer. And it's great that there are other options for SMEs, which is good. And we'll go into it a bit more. So how do you fund that business? Are you licensed as a bank? Do you need capital? And you mentioned kind of big backers there as well, but do you need that capital to fund this business?
Absolutely. So we do need lots of capitals to fund because so far we have deployed maybe about $500 million funding already, and we expect in next 1 year or so we will reach about $1 billion funding in a year. So we are funded by large players, as I already mentioned, and in fact very recently, about 2 months back, we had another round, Series B, and we were valued at about 120 million euros.
Wow.
And we raised about 25 million euros very recently.
Yeah.
And we are also then funded by large banks like Silicon Valley Bank, as a debt platform for us. Yeah.
Interesting. So just explain a little bit further on the type of company. So supplying to a Zara or Lulu is more in the sort of commercial retail space. Does this work for services and other industries as well?
Absolutely. We are industry agnostics. So we work across industries. Some of the large industries are textile, like garments, even, we call it even handicrafts or even home textile. We also work a lot in bunkering industry. That's one of the key industries for us. And we do work in services industry as well.
Okay.
Maybe I'll give you a couple of examples of services industry. Let's say there's a forwarder who moves the goods for, let's say, apparel group as an example.
Yeah.
Now apparel group says, look, keep moving the goods for me. Raise an invoice to me. I'll pay you after 60 days or 90 days later. But the forwarder needs to keep paying to the shipping line, right? Or the airline. So we manage that working capital again for him.
Okay.
Or could be another one. Let's say somebody is managing travel for, let's say, IBM now. IBM says, hey, keep booking tickets for me and I'll pay you after 90 days, right? So again, he needs to keep paying to the airlines to book the tickets, but there's a 90-day gap in there, right?
Okay.
So we fill that gap as well.
Okay. Interesting. But services in terms of, say, services in terms of marketing or media services and digital development work, do you help with that?
So what we do is we finance the receivable per se. So it could be anything as long as there's an invoice to the right buyer.
Yeah.
So irrespective whether it is a digital service or is it a goods or whatever product it is, we kind of package something around it.
Yeah, I know you quite eloquently explained the difference between invoice financing and factoring, but one of the things that I found with invoice financing is it's almost not fast enough. How do you overcome that when, you know, there's, if you have multiple invoices and, you know, they've different dates on them, they've different deadlines, they mightn't qualify for the right amount. You might, it might works in theory when there's a one invoice with a large figure on it. But if you've got 100 small invoices with tiny figures, how do you put them all together and get that capital? Yeah,
very good point, Richard. So we are a very technology-based finance company. So we have a very good state-of-the-art platform where, irrespective of the invoice amount, it could be $1,000 or it could be even $5 million. So it works like this pretty much. You know? So you just upload the invoice, goes to the buyer literally clicks the button and approves it and gets funded.
Yeah. Well, with the type of companies you mentioned, well, more Rocket Internet rather than, I wouldn't have assumed Maersk would be in this space, but and the name, I assume that it would be digital enabled. But so have you got a proprietary dashboard that people would go on and you can approve the invoices and things like that?
Absolutely. Yeah. Okay. So we, as I said, we got a very state-of-the-art platform. So once we sign up with the seller, so from end to end, it takes only about 7 to 10 days for us to onboard the supplier and start funding them. Okay. Versus to even go to a bank to open a bank account, we all know how long does it take, right?
Yeah, exactly.
So for us to, from end to end, it takes only about week to 10 days for us to start funding. Okay. And once it's set up, it takes literally 24 hours to submit the invoice and get funded.
Okay, interesting. And how did MODIFI, other than bringing someone with experience on board like yourself, how did they approach entering this market? You mentioned the different countries that they see in this market. How did they approach kind of setting up in Dubai?
Sure. So we also into the process to partner with some large B2B market players. So at this stage, I can't name them, but those are large market players. Some of them are even started by the government, UAE government initiatives as well. And their mandate is also to help SMEs and import and export. So they provide the marketplace and we are into the process to support them in terms of financing.
Yeah. Before we go, interesting. So you know, that's one of the ways that you set up, but how did you kind of decide, hey, for this region, I'm going to have my HQ in Dubai, and where did you go about licensing your business?
Sure. So this is a space we are, from licensing perspective, we are headquartered in Netherlands. We are a Dutch company, so there's no specific license required. It's a branch, right? Yeah, and in UAE, we are DED licensed company, and we got a license for forfeiting.
Okay.
Yeah. So from this,
what does forfeiting mean?
So same. It's more another name for factoring, basically.
Okay. Yeah. Okay, but it's kind of under a financial type regulation.
That's right. So it's more for lending again. You know. Yeah. There are different technical words around it. Yeah, but again, to simplify, it's a lending process.
Yeah. Interesting. Because you know that's really interesting around fintech, that how to regulate it and where do things sit and where do companies sit as well. How do you view the sort of the fintech industry? How do you kind of break it down? Do you think that some of these providers are, you know, doing something truly disruptive, or just are also kind of, you know, working in a you know, part of the regular finance industry?
Sure, I think it's a very interesting space, especially during pandemic. We all learned that, you know, the paper-driven approach does not really work anymore. So anybody who is around fintech or anything around digital really makes life easy for everyone in the process. In fact, if I take a step back, we started with only financing the trade. And then we learned in the process, only financing is very important part of the for an organization, but they need more than that. You know, so we provide even more solutions to them. Yeah. Things like, where is your container at this point of time, right? So things like Suez Canal, during Suez Canal issues, so nobody knows where the containers are, right? Yeah. So we already have on our platform, even the exporter and importer, they can even track where the shipment is. Okay. So we are going not only finance, even managing the trade for them.
Yeah. Interesting. So that's one of the things that you're doing. You're focusing on, you're focusing on the factoring part, but you're trying to provide more visibility.
Absolutely.
And that makes the platform more sticky as well. So people can, yeah.
So we don't want to restrict ourselves only to the finance angle, which is one of the very important piece for us, but we are looking at always more value addition for the exporter, which help them to grow and compete against the larger players.
Yeah. Okay, talking a little bit about competitors in terms of, I know there's a few companies, I think one of them listed in the UK, Funding Circle or something, and there's Beehive here. They offer a different type of, their first product is a different type. It's mainly for SMEs, for almost crowdsourced funding. And then they offer additional things like invoice finance as well. Everyone will say I don't have competitors or we're doing our own thing, but how do you view that space?
I think competition is healthy as well, because it's an industry where we need to educate people also. But because otherwise they keep looking at, hey, look, my bank provides me, why do I need you? Right? So bank do provide you services and financing, but they always need something around it, like collaterals, as I mentioned, or always look at your healthy balance sheet. And we are kind of an alternate to the bank, and we kind of supplement the banks as well, right, in the process. So from my point of view, competition is healthy to have. But when we talk about digital players, there are a couple of them, but they're fragmented, so we are really a truly digital global players. So I don't really think there's any other global digital player like us. There are maybe larger players than us, but they are more maybe industry specific or geography specific.
Okay, interesting. We have seen a lot of innovation, especially in Dubai and Abu Dhabi in the Middle East in fintech. With the onset of e-commerce, but there's been a lot of different types of startups offering different solutions, payment gateways, different types of financing. Is obviously the digital revolution is here to stay, but do you think that it's a zero-sum game in fintech? That will there be some consolidation and winners and losers?
I think so, but I think it's still at a nascent stage. It is still, there's a lot that can be done in the fintech space.
Okay.
Yep. So it's given again pandemic situation, everybody's looking at again different ways to automate everything. So there's a lot of AI happening, lots of things are happening on the fintech space. I think at some point of time there will be consolidation, but I think still there's a lot to do on the fintech space.
Okay, and if there's consolidation, Ankit, what way will the ball drop? Because we're seeing more digital banks. We're seeing lots of digital banks in the Western world, but also existing entities here are launching their own digital banks. But then on the other side, we're seeing payment gateways entering into this space. And there's rumors that maybe Stripe will offer financing and things like that. So where's your gut feeling of where things will go?
Yeah, I think we will learn as it unfolds, right? But as I said, consolidation is going to happen. For example, we also acquired in the process already we started only 3 years back. There was a larger organization called Prima Dollar based out of UK. So they were much in existing much longer than us. But we acquired their business globally about 6 to 9 months back. So this is the way we are also consolidating and growing organically as well as inorganically.
Interesting. Fair enough. Understood. And now we'll take a break to hear from our sponsor. So when Augustus Media was starting our business in 2015, one of the things we obviously needed was insurance for employees. Back then, it was only a couple of us, so it wasn't a big deal. But we came across Petra Insurance and we started using them. Almost 7 years later, 30 employees in the UAE, we still use Petra Insurance. They are one of our core business partners. We have a direct relationship with them, and anytime anything comes up, whether it's group insurance, whether it's individual things, they're very quick to get back to us, and we really feel they're a business partner for us and have helped us grow. And now we're back. Yeah, good. So, kind of backing up a little bit, like, why do you think there is such a problem with, especially with access to debt in emerging markets? It might be an obvious answer when I put it like that, but why is there, it's to do with risk, but why can SMEs in this region particularly, there's so many profitable banks, there's so many well-established financial institutions, yet there doesn't seem to be funding for startups, there doesn't seem to be funding for SMEs as opposed to other countries. So
when you again go to a conventional bank, they are more interested to look at the larger organization, right? So when it is as an SME company, they don't really maybe having collaterals to offer. And banking revolves around the collaterals. They want to secure themselves. So that's one of the key reasons, so why they are not able to leverage that requirement. And again, when it is a smaller organization, maybe they don't have enough paperwork around it. They're not very sophisticated, not enough platforms around it, So that's why maybe it's a little bit more challenging for them to be supported by banks. That's when fintech or trade finance companies come into play and help them to grow.
Okay. How do you compare? Can you go through the markets that you look after? And are there any insights and differences in lending and appetite and regulation in each of the markets?
Yeah. So some of the markets, like for example, India is a very highly regulated market. It does not allow domestic financing, for example, which is not a domestic company. So what I mean is, let's say there's a company in India supplying to domestic company within India. So we cannot finance that trade. If we want to finance that trade, we have to be regulated by the Reserve Bank of India.
Okay.
Versus UAE, it's more liberal in that aspect. So even a company like MODIFI, we can finance even the domestic trade because we are licensed here. But again, it makes a difference when it is a domestic versus international trade. So we specialize more on the international trades when goods are moving from one country to other. But again, depending from the geography to geography, we do in domestic as well.
Okay. And the other countries, the other regions?
So Bangladesh, again, so they are highly regulated. They also don't allow domestic. We do only exports from Bangladesh. And so is the case with Pakistan as well.
Okay. So just, explain that a little bit more. They don't, so unless your company, MODIFI, is regulated in that country, you can't provide financing
to the domestic business. So what I mean is, let's say
you can only do it if they're exporting goods.
Absolutely. Yeah.
Okay.
Yeah.
Okay, so you don't really have a business there.
So we do have a business, but we are helping only exporters or importers.
Yeah.
We also, from a risk perspective as well, you don't want to take a risk on local markets also, right?
Yeah.
So our business model is we pay to the exporter and we collect the money from the buyer on the due date.
Yeah.
So our typical deal is, let's say an exporter from Bangladesh as an example, exporting to somebody, let's say Walmart as an example, right? So Walmart says my payment terms are 90 days or 120 days from the date of bill of lading. We pay to the exporter in Bangladesh and collect money from Walmart on the due date. Yeah.
Okay, interesting. So that's one of the reasons why it's good to set up here.
Absolutely.
Okay,
because from here we look at the global markets, so which really gives us a kind of 360 view from here.
Yeah, yeah. And what market dynamics need to be in place? Do they need to be well capitalized markets? Do they need to have a lot of sort of startups, venture and SMEs already in place?
Sure. From our perspective, we need a market which has lots of imports and exports, rather than only startups. Because as I said, we finance the trade. We need an economy which is, again, India is a classic example. Lots of trades happening all over the world. Pakistan, Bangladesh, UAE are again classic example where lots of goods are moving from one country to other. That's what makes it interesting for us.
Okay, interesting. We're talking about fintech, but we could go into so many other areas. When we're talking about imports and exports, there's obviously a big conversation happening post-pandemic around logistics and supply chains. And you mentioned containers earlier. Has that disrupted your business?
To be honest, it's a positive situation for us because, again, there's a lot of disruption all over the world, as we all know that. So it creates a lot of anxiety as well to the exporter. When will I get paid from the buyer? So that's when they need it even more. They want to make sure their finance is secured. So that's the reason, we kind of every quarter on quarter, we are kind of doubling our business globally.
Okay. Yeah. That's high growth, and obviously you're well funded as well. So, but you don't think the sort of delays, the longer delays, is an issue because people need the cash?
Of course.
If the orders are going in, people need the cash.
Absolutely. So it really helps them, even the situation as well. When they know there's a container issue, they know that goods will reach late, but they don't really worry about the working capital because they already got paid by MODIFI.
Yeah. So
they really says, look, Mr. Buyer, fine, I'm happy. Even it takes a little bit longer. Payment terms are going from 60 to 90 days. We are happy because we are supported by MODIFI. So we will continue supporting our customers.
Interesting. Well. I'm going to put a CFO hat on for a second. What's the determining factor for a business to decide on whether working capital, to take a hit on interest on that to generate versus trying to get a better balance sheet or trying to inject different types of capital into the business? Well, if you need cash flow, there are different ways to get it.
Sure.
So what's the sort of financial rationale for a business to go against existing orders?
Sure. So there are a couple of reasons, Richard. One is when I'm an SME company, I want to grow and I don't really have collaterals to offer. How do I grow, right? So that's the reason when I also wear my CFO hat. In fact, before I joined the trade finance industry, I was always acting as a CFO. So I really understand how CFOs look at it, what are their pain points and how I help them to grow the business, right? So also when they work with the companies like MODIFI, which is an off-balance sheet item, right? So what it means is, let's say you work with a bank as a CFO, so you got receivable from your buyer and you got payables to your bank, right? Versus when you work with a trade finance company, we buy your receivable. That means it goes off your balance sheet.
Yeah.
So it also helps you to improve your balance sheet immediately.
Okay.
And it also takes the risk off your balance sheet.
Yeah.
So that means in case something goes wrong with the buyer, so that's not your risk. We don't come back to you.
Okay. Oh, interesting. Okay. But is it not good to have receivables on the balance sheet?
So it's good to have receivable, but not too good to have payables as well, right?
Yeah,
so when you have receivable and payable, so it doesn't really help you, right?
Yeah.
So but when we work, we buy your receivable, you don't have receivable and no payables.
Okay.
So you only have bank
Yeah.
balance.
Yeah.
That helps, right?
Okay. Thanks for the lesson. I hope my CFO or my finance director is listening. But yeah, so it's just a reason I ask is because, although SMEs struggle with cash flow, they also struggle with margin.
Absolutely.
And it's kind of a trade-off, right?
Correct.
You can get better cash flow, but you're also hurting your margins.
True. Yeah, true. But again, if you want to grow, you need to continue serving the market, right?
Yeah.
You can't say if there's a customer, let's say anybody who says, look, I'm increasing my payment terms from 30 to 60 days or 90 days. You can't say, look, I can't serve you anymore, right?
Yeah, true.
You still need to serve them, but if you don't have cash, you can't serve them, right? So that's the reason, when you have access to cash, you say, Mr. Buyer, fine, I'll support you. I need maybe a little bit extra pricing. Maybe buyer also understand and helps you on that as well.
Yeah, interesting. Do you think the ability to pay or the payment terms differs in the markets that you look after?
Yep. So in general, it's more or less same. So if you go to US, they say, look, there's no LC concept. They look at open account payment terms. They say, look, just ship it to me. I'll pay you after 30, 60, 90 or even 120 days. Europe is still sometime they issue LCs, but usually not nowadays.
LCs?
Letter of credit.
Okay.
Yeah. So, it's relatively secure, but it's a lot of paper driven, again, product where you need to submit lots of documents. It's pretty extensive in terms of documentation. So in general, yeah, so more or less it's same, ranging about 30 to 90 days payment terms.
And here?
Here as well, yeah.
Okay, but with sort of digital payments gateways and invoicing abilities with different software, a lot of people send links now on WhatsApp and bots and things like that. Is there a shift around payments? Are we getting kind of upfront and immediate payments more?
Yeah, I think it depends on the scale. What scale are we talking about?
Yeah.
If you are talking about smaller numbers, yes, I think it's happening. But in terms of large, so you still go through the banking channels and go through the banks, yeah.
And you go through the procurement departments and accounts teams for the bigger companies,
yeah.
and it's there. Obviously, it's better for them to delay the payments.
Correct. Yeah, absolutely.
Which is where you come in. So moving on to another topic. What about governance, especially in emerging markets? And a lot of governance is to do with it comes down to bad debt and things like that, and almost bad governance, malpractice. It's a big topic of conversation. It's the G in ESG.
Yeah.
What's your sort of view on governance in the markets that you look after?
Sure. Again, it's a very important point, Chris, especially during pandemic. So lots of buyers have also gone bankrupt, right? So lots of exporters earlier were not sure how do they manage the risk, what sort of a governance they look at. But when we work together, we also provide them with a credit insurance product as well, along with our financing product. So we couple along with that. So it really helps them also to choose which customer they should work with and which customer they should not work with. So we provide them access to all that important information as well. So what it means is, let's say you want to work with a customer, I will provide you all the relevant information, whether it's the right customer for you or not, whether they pay the money on time or not, whether they have the healthy balance sheet or not.
Okay.
So it really helps you to take the informed decision whether you want to work with that customers or not.
Okay, so you do background check on the businesses.
Absolutely.
Yeah. But so that's kind of a traditional approach, and it's a good approach, and it mitigates risks in many levels. But there have been some business stories in this region, right? With large organizations like Arab Tech liquidating. We've had the Barrage issue. We've had I don't want to name them all, but there's a few. There's not loads, but the NMC, which had a big turnaround recent. They're making profits again. But so, do you think that people trading with businesses here in this region think that there's sort of not good governance?
I don't think so. I think it is changing over a period of time. Earlier, it used to be lack of information, transparency issues. But I think over a period of time, we see a lot of transparency, a lot of information around it. In fact, maybe just to kind of substantiate with my business per se as well, when we used to go to the buyer saying, Mr. Buyer, we work with your supplier and you need to pay payment to MODIFI on the due date. Initially, they were hesitant to understand what it means. They say, look, no, we work with a supplier, we will pay to them. But over a period of time, I see that changing and they're happy to kind of adapt to this new system as well.
Okay.
So we see a transition happening in that on that front as well.
Okay. And how is that happening?
Because again, they as a buyer also need longer payment terms, right? So earlier they were providing, let's say 60 days payment terms. Now they said, look, I need 120-day payment term to the seller.
Okay.
Right? Seller said, look, if you want 120 days payment term, I want to kind of be supported by MODIFI. So I want you to pay to MODIFI. Then they are happy to understand what is this new model, how could MODIFI help them. So we also work with buyer-led financing as well. Sometimes buyers approach us saying, look, we want to change our payment terms from 60 to even 90 days or 120 days. Could you help us?
Yeah.
So then we work with their supplier and help them to kind of grow this payment term from 60 to 90 days as well.
Okay. So I get why that helps your sort of sell into those companies. It's good for both sides.
Absolutely.
But let me kind of phrase it in a different way. If your backers fund and the recent rounds, what are the types of questions they're asking about, okay, you're going to do this region and you're going to invest X percentage of this capital into this region.
Sure.
Do they think it's more risky?
I think they think it's worth it. That's the reason they're investing it, right?
Yeah.
So, I mean, as I said, we are growing organically and inorganically. So what I mean is, as I said, acquired prima dollar business globally. When UAE was started about a year back, I already see Pakistan started after that, Bangladesh started, Hong Kong. In fact, very recently we started US market as well.
Yeah.
So growing at a very fast pace. I believe they really trust and believe in this industry and market, what MODIFI is doing. That's the reason, so they have been really kind to keep investing in MODIFI as well.
Interesting. What would accelerate the growth more in this region? Do you think, if it's a Series A, do you think at some point a financial institution might come on board as well?
So we keep looking at more financial institutions as well. So lots of things are happening, good things are happening.
Okay, which you don't want to share right now.
Maybe,
yeah, no problem.
Soon.
So cool. So, what are the other things on the roadmap for MODIFI in this region? What are your plans?
Sure. So growing, as I said, very, very fast pace. So very recently started US. So the idea is to kind of keep looking at different markets.
Exporting from here to the US.
Absolutely. Exporting from here to US, or in fact, we already got a handful of clients into bunkering industry in the UAE market, or even clients exporting from Bangladesh to even US, Bangladesh to UK, but invoicing are being raised from UAE entity, which is a transit hub, right?
Yeah.
So what it means is UK customer gives an order to UAE company source from Bangladesh or Pakistan or China or Hong Kong and export directly to UK or US.
Yeah.
So we see huge business opportunity on that front as well.
They might put it through a free zone here and then
so may or may not. So the goods go directly from re-export from there directly.
Okay, interesting. Yeah, it's funny on Dubai Works we've had different types of companies and a theme that comes up is the UAE as that type of an export hub, but also even in some ways as a manufacturer type hub as well.
Yeah.
So that kind of plays to your strategy.
Absolutely, it does.
Yeah.
Lots of free exports happens from here. Lots of logistics hub as well, right? So it works really, really well for us.
Yeah. Even surprisingly so, like, houses are being manufactured here and exported to the UK and things like that.
Absolutely.
Amazing things like that. So that's markets. And then, what size is the team here?
So we are relatively new, as I said. We are about 5 people here, but growing at a very fast pace again.
And how would you decide which sectors to go after? I know you mentioned the sectors earlier, but how do you kind of allocate your resources?
So it really depends on where the need is, right? So we have this platform, right, which is wonderful working. So lots of time buyers approach us, suppliers approach us. We have a very well established marketing engine.
Yeah.
So that keeps very well oiled machine. So that also keep churning lots of leads for us.
Yeah.
So, I mean, we usually don't need to go and look for deals all over the place. So it's usually, we keep getting lots of deal to the table, and that we really spend time and effort to figure out what deals and opportunities make sense for us.
Yeah, interesting. That's the best part of sort of B2B, knowing now that you can actually generate a lot of inbound just by having a good digital.
Absolutely.
Yeah, it's interesting. Makes changes things really with resources. So Ankit, moving on to, I know you work in different countries outside of, say, the Middle East, but what's your view on the Middle East in terms of a global market or an emerging market? Obviously the UAE is doing well, but where are the other countries that you think that can be opportunities?
Oh yeah, so Middle East is one of the very important hub for global markets. So Saudi is another very important market for within the Middle East. So I think that's one of the key market for us as well.
Yeah.
So in the future, we will be looking at expanding there as well potentially. Yeah, so that's another key market. It's a huge economy there, right?
Yeah. And how would you approach that? Would you need to have an operation? Would you treat it like another branch?
So potentially a branch, or maybe looking at maybe end of the day, some acquisition, maybe eventually, I don't know. Yeah. So it will really unfold over a period of time. So maybe acquisition, maybe having a branch there, or maybe a strong partner there, local partner there, something on those lines.
Yeah, interesting. Fair enough. And so what are the sort of fintech trends, irrespective of MODIFI? What, looking at the overall sort of themes and trends, I kind of mentioned a couple, but what do you envisage? We're nearly doing our predictions for 2022 now. If there were a few things that you would predict in fintech, what would they be?
Sure, I think it's going to be disruptive as always. So there will be a lot more changing happening, lots of new things coming up, lots of AI happening. So hopefully with all of these, it will really make life easier. Given pandemic, again, lots of issues, lots of disruption for global trade especially. So I think with all of these new products, it's going to help pretty much everyone around the process.
How can AI help with fintech, and which ways?
Sure. So again, we are trying to implement lots of AI product within our system and within our platform, which will help give lots of information to exporters or channel partners that we currently work with. So we are also trying to connect them between different sellers with different buyers. So lots of products around that, which helps them to expand the business and grow globally.
Yeah, interesting. And what are the things in terms of going back to kind of predictions, in terms of governance and cybersecurity and things like that? Like, what are the things that a company should have on their roadmap for next year?
From MODIFI perspective?
Just in general.
Okay, in general, yeah. So I think so the key right now is to survival. I think that's the key, right? So most of the players would be looking at how to survive and grow the market and make sure, keep managing that risk as well, right? Rather than working more on the governance at this stage. I think so that would be the key for the coming year.
Yeah,
from my point of view.
Fair enough. Yeah. And would you would you support the theory that this could be a sort of a growth decade? Like, are we sort of bouncing out of, the roaring 20s sort of analogy? Are we bouncing out of COVID and then it'll take a year or so to settle down, and then we'll have, really high GDPs around this region? Yeah.
So I was talking to one of the retailers out here, one of the very, very large retailers. So as per them, the numbers they currently make are even much higher than what they were doing before COVID.
Yeah.
So apparently the market really, really bounced back in this part of the world, and we see busy roads everywhere, right? Expo also got lots of positive momentum for the region.
Yeah.
Lots of events happening around UAE region and Middle East region in general. So I see lots of good things happening for the region here.
Very positive outlook. We can't finish really without talking about crypto and blockchain, because, that in one sense, crypto has promised to replace sort of fiat currencies and different types of finance. Yeah. What's your personal view of crypto, and then how do you view it for MODIFI?
So it's really, from my point of view, I don't really understand crypto too well at this point of time. I wish I did better than what I do understand right now. But yeah, it's a space to be in, I believe, right? So look at Bitcoin; it's 64,000 right now. So I think it's a space to be in for next few years as well.
Yeah. Will you be financing crypto payments? Will you be factoring crypto payments?
Who knows? Yeah, maybe yes, in the future. Yeah.
Yeah. Why not?
Why not? Yeah.
If people are paying in whatever currency, you'll be there.
Absolutely. Yeah.
It's modern finance.
Yeah.
Modern finance. Yeah. Okay. Well, really pleasure talking to you. We'll definitely keep an eye on MODIFI as they continue to grow, because it seems like it's on the right trajectory.
Thank you so much, Richard. I also enjoyed conversation with you.
Thanks, Ankit. Take care. Thank you. So I hope you enjoyed that conversation with Ankit. He clearly knows the topic and the industry really, really well. I tried to keep pace with him. Some of that went over my head. but hopefully people in the procurement and finance department or someone who wants to know a little bit more around that, because it's a really useful space around cash flow for businesses. Thank you to Shahir and Ali who produced this show, and we'll have an interview again at the same time next week, 11 a.m. on Thursdays, and that means it will go on to the podcast wherever you're listening this to on Thursday afternoon. Please do subscribe, leave a review, and even on some of the podcast apps you can record an audio message to leave a question or suggestion to who you would like on this show. And then also Smashy, of course, is available on iOS and Android. It's coming to smart TVs very soon. You can go on and you can get a 7-day free trial to have a watch at over 8,000 videos and all the different 141 Dubai Works episodes. Enjoy the week. See you next week.